Hey dividend investors, today I'm going to talk to you about 3 amazing tech stocks that pay dividends that I think are set up really well for the future. Let's get down and let's check out the first one. Okay, so the first one is Texas Instruments. Yes, you've probably already seen their calculators and all that, but what they do make is semiconductors, and this is a major part of their business. And there is currently a semiconductor shortage, and they're saying it could last another 6 to 9 months and possibly more. So I personally think that this is set up great for at least the short term and possibly for the long term, considering there is going to be more and more semiconductors needed because of the Internet of Things. More and more things are going to need the internet. More and more things need to be a computer. And what do computers need? They need semiconductors. Washing machines, fridges, stoves, cars. Cars need a lot of them. Everything. Literally, light bulbs these days are computers. So, what was it? It was 2 or 3 years ago where I was reading that there was some different research papers that were going into the fact that now they could actually charge a cell phone from the light that is emitted from the light. And it's not the actual light, it's some type of radiation stuff that just charges the phone somehow. Also, there's different inventions being made where there's a speaker inside of the light bulb. Weird things like that. Yeah, the Internet of Things. It's going to be crazy. There's going to be robots probably in 10 years doing stuff for us. This is the future. And they do trade at a kind of high volume at 4.5 million shares average traded per day, which is a lot. From there, what we want to look at is their dividend as well, and they do pay a 2.4% dividend as of today. And if you look over the past 5 years, you're looking at a stock that was sub $75, now worth over $175. That is well over double and absolutely amazing, especially if you did invest in it back then, which I did not. They took about a 30% hit from coronavirus, and then they exploded higher, and they are still going. The only thing I really want to point out is the fact that if you want to look at the actual lines on this, it has broken down past its level of support, so it may drop just a bit more, but considering that it's up 3.3% today, means that it's going to be well over that 175 mark and back going once again. Possibly this was needed just so that it could go for another big run. We're going to have to see. Now, if we look at the financials, they actually made less revenue this year than they did the year before and then the year before that. However, they did do really well on the earnings front, which is fantastic. They've had 4 blowout quarters, and I think considering that there is a shortage worldwide of processors, yes, they are going to have another fantastic quarter. They do announce their earnings on April 19th if you wanted to get in before the earnings call. But again, it depends on how risky you want to be, if you want to wait until after the earnings call or before and get in, or possibly buy a couple of call options before on April 18th. There's a few different ways that you could play this, but as a dividend investor, I'd be looking long term. They also do have a history, at least in the short term, of increasing their dividends. Back in 2017, they were paying 50 cents per share. Now they are paying $1.02 per share. So this is great. Since 2017, they have essentially doubled their dividend, which is fantastic. Apple is the next company that I'm going to talk to. Yes, they've had a bit of a downturn recently, but of course, any stock that goes flying high needs to come back down for consolidation before it goes back up. So you have to keep that in mind. It's never the end of the world for a stock that's as big as Apple. Literally one of the biggest companies ever in the entire world. From there, we want to look at the dividend. It's kind of small right now, 0.68%. It's a little baby when it comes to dividends. However, when we really look at Apple, the CEO came out around the earnings call recently saying that they want to raise the dividend. So I would assume that they will be doing so again. 111 million shares traded per day is ridiculously high. Over the past 5 years, they've had a run after split from about $25 a share to $121. Of course, they did split, so keep that in mind. It was not actually $25. And of course, they have had 3 close quarters, 1 blowout quarter, and of course, they have made a ton of revenue and a ton of earnings over the past 4 years, including the recession that we just recently had from the coronavirus. Let's also remember that they do increase their dividends quite frequently. As we can see here, back in 2018, they were 18.25 cents per share, of course, after split prices. And of course, now they are 20.5 cents per share. And they have been said to have been looking into increasing their dividends, which is beautiful. Whenever you hear that and you're a dividend investor, it is just beautiful. It's amazing to hear. And of course, the company that I would never buy because I just highly disagree with their business practices, but Microsoft. If you like Microsoft computers and things like that, if you use Windows or Microsoft Office or really anything Microsoft, definitely buy Microsoft because, of course, if you're buying their computers, you should also own their stock. And from there, they are trading at around 30 million traded shares per day, which is huge, about 1% dividend, and I would assume that that would also be getting raised around the same time as Apple because they tend to mirror each other. Also, fantastic run up from 50 up to 238. So this one's actually outperformed most of the stocks on the stock market, and same as Apple really as well. So these are all 3 great stocks to own for growth, but also dividends are nice to have on the side. And then when we look on the financial side, they have had 4 great quarters again. They do announce earnings April 27th, so keep that in mind. They've also had a fantastic growth in revenue and earnings. Now, even though I would never buy Microsoft because I disagree with Bill Gates and everything that Microsoft does in most cases, I cannot deny the fact that they make a lot of money and they do pay a dividend, and they are a fantastic company when it comes to earnings and making money. And they do raise dividends as well. As we can see, 2017, they were at 39 cents per share and currently sitting at 56 cents per share, which is fantastic. If you're looking for dividend growth, I would be definitely looking at Texas Instruments. If you're looking for a solid company that is basically a blue chip, then I would be also looking at Apple and Microsoft. Apple being the one who is more like a parent company, where they tend to they have outperformance growth like crazy, but they tend to just keep their dividends really low. Meanwhile, Microsoft has a higher dividend. They do grow their dividend. In my mind, my just math off the top of my head right now seem to grow their dividend higher than Apple does. However, if you're looking for dividend growth and potential future huge amazing gains, Texas Instrument is number 1. These are my own opinions. Never trust a random person on YouTube. I would love to know your input and your thoughts as well. Leave your comment below. I want to read them. I will probably respond, and I will see you guys again next time.